Thank you. High-level observation means, I'm not going to go into detail. I mean, in 15 minutes, it's hard to go into detail. Have a little bit of press time. It's interesting that we have about 1/3 of the time for the pricing, so we have to make the prices right to get enough money in. Then for the claims, we have to watch out that we don't spend too much, because then we have the long session. For the IT, if we don't take enough money in or spend too much, we don't have left money for IT. So we should be very prudent in those two sections to be able to pay the third one. Most of the slides, some of you people will know, so I put them together a little bit just in a different context, and to try to give an overview of what is happening more cross countries. It's not in every country, every country is a little bit different, but there is certain observations. Come on. Doesn't work. Do we have a hand? Or a hand button? Okay. Okay, does it work now? Good. Okay. So there is 4 key observations which I will then give with a couple of examples. First of all, if you go through the markets, it's absolutely phenomenal how many different parameters the insurers use for pricing motor business, both Casco as well as MTPL. And sometimes you have a portfolio, they ask how big is your portfolio, 8,000 vehicles, how many parameters? Oh, we have 28 different parameters. And that is really statistically doubtful. I will show you on an example how much data you really need to be statistically sound. It doesn't mean not to use them, but it just means to be sober enough to understand this is not on statistical base. This may be on evaluations that you say, yes, we trust this broker in this town more than this agent in that town. It could be, yes, we believe kids who have live in this part of town are better than in that part of the, but it's not statistically proven. And I think that is very, very important. On the other side, if you have a stable set of numbers, you can, under multivariate methodologies, etc., get extremely interesting information out, especially if you benchmark it against, for example, German things. Another observation is also interesting, and this is also going forward to big data. On fleets, best yet, you don't ask for any data if you want to price something. It is, oh, we have 100 trucks, give me a good price. How many losses? Where are they going? What's the expense of the drivers? Yeah, so you can see that for fleet business, especially in a soft market environment like we have it now, it's more or less you have to do the business without any information. And so if we're talking about big data, I mean, there we really should talk about small data or get data at all. So there's a big disconnect very often. Nope. Now it does, okay. So here you have a chart of the German statistical data we use from the association. You see how many different points there are in every class. So there's 12 regional classes, 3 different professions. There's 39 bonus-malus classes. So overall, if you take the possibilities, you have a 138 million pricing cells. 138 million pricing cells. And it's not that any of those cells are fully empty. And we can use them at this density because we have 41.8 million risks. This is 2015, and 2.7 million claims. And we collect those data for 40 years, so we can be statistically valid. This curve shows very well how much you need to be really statistically valid on these data sets. So on 1 million data set, on a 95% confidence interval, you're still off 2.3% of the loss ratio, which is more or less like a typical margin for MTPL. So it is very often that actuaries are telling the local management too much about statistics, which is just not statistically proven. It's dangerous, but just be aware of it. Then the question is, and here it's like two areas, and we will see this during the whole conference. When we talk about parameters for pricing, do we talk about subjective, behavioral, so what person is driving, how old is he, how is he driving, like with telematics, or are we talking about objective? Where is the car license? What kind of vehicle is it? What horsepower does this vehicle have? How old is it? How many kilometers is it driving? In both of those sets of parameters, there is a huge change coming. This is the automated driving. We had in Riga a conference, Mr. Sirbulis, who is the local, from the local motor association, the guy said, this girl here, she will be the last one, she's now 4 years old, she will be the last one who will make a driver's license. Because 1 year before she will make a driver's license, manual driving will be outlawed. 2029, forget it, you're not allowed to drive anymore without using an automated car. Now this is vision or is it nightmare? For me it's more nightmare, honestly. And if it's a vision, yeah, it's a question, is it reality? I say no, it's not even a vision, it's Spinnerei, as the Germans say. And I can give you a nice case. When I was a small kid, the first jet airplane, 707, that went cross-Atlantic, came into being. They showed a picture and said, for the next 10 years, this will be the standard plane until a 1,000 meter long, for 4,000 passenger, atomic-driven plane driving at 4 times the speed of sound will take over. Did it happen? Not that much. I like the Gardner hype cycle. And here's the question, you just have to see where we are on automated driving. Are we at the peak of inflated expectations, or are we going already on a downhill? Or are we still on the uphill until the disillusion is really full? I think it's important because when we are doing insurance, it's a very sober and boring instrument. We need to understand how much is real. Where are we? And when do you have to move? Warren Buffett has a nice example. Cheese or worm. There is a saying, the early bird gets the worm. So if you're a fast mover, then it's good. But most things out there are not worms. Most things out there are cheese. And cheese are in the trap. So if you're a first mover, you're not going to survive it. And a really good guy is somebody who's standing next to this cheese and say, let's wait, somebody tries to grab it, what happens? Because then he knows the mechanism has been used. But that's also, Warren Buffett says, this is a good thing. Most of the mice then run away instead of then grabbing the cheese. And he's the one who grabs the cheese. Technical progress, though, is very, very important. We had a study from the Allianzzentrum für Technik in Munich about 2 years ago. If we just use the 6 major driver assist systems, and they used the B-class Mercedes as a test case, how much less loss costs, meaning how much less you would expect per vehicle and year to pay. And it's 75% in MTPL and 65% of MOD. So these systems alone, if they would be widespread, would drop the average premium significantly. And here you can see how those systems came in. The good news for CEE is you can observe countries like US, Germany, others, and see how that works out. Because most of those cars will come as a young used car into Central Eastern European countries, and then you can still, learn from that. What I find frightening is that nobody's really interested, or very few people are interested. Some small owner-driven companies, they're looking at that information and using it, and they will be ahead of the gang. And this is roughly what the fade-in is according to Boston Consulting Group. So we're just at the edge of now getting partially autonomous. And this is the consequence for the US premium, for example, if that fades in. So you can see that the average loss costs, this is not inflation adjusted, will drop from about 600 euro to 300 euro in the next 20 years. Which means you have to get efficient and more efficient and more efficient because the percentage of costs is not allowed to go. The other more subjective one is telematics. And here Italy is in the forefront. This is a slide courtesy of Matteo Carbone from the Observatorio. Matteo does always great things in we have some audience. I think we have somebody here from Octo, right? Yeah, right. And so this is interesting. Why Italy? And I have a very simple situation. Italy had very rudimentary system of tariffication before. So they are starting with a very low level, so they could go really to the next dimension. It's like skipping the normal telephone and going to the mobile right away, like in Eastern Europe. And the other thing is Italy has a way higher premium than average premium than many other countries. It's about 2.5 times what it is in Germany. So by differentiating the premium, you can still do something more than in Germany. And in Germany, we have a lot of criteria which indirectly measure what telematics is trying to measure. That is also, according to the official opinion of our company, the reason why Germany will stay a niche for the time being. It's different in fleet business. Here I've heard absolutely fantastic things about big fleets, how telematics is influencing it. And the most important factor is if somebody is telematically supervised on a big truck, you can save up to 3,000 euro in diesel fuel costs because of more sober driving. So it's maybe not the insurance premium, but it could be on the side issue. So here I think that's an area where also from autonomous driving, etc., truck industry will be totally different, and it's very interesting to monitor it. Average premiums, and you can see also here Hungary is still at the end, 2013. I don't have a new one for 2015 in this nice format. And you can see Hungary now, of course, is much, much higher. I think it's 80. Thank God they did something about it. So the question is, reality check under this environment of premiums in CEE, is it economical valid to have a telematic tariff? And here I say only together with Casco, very, very rarely on an MTPL-based loan. And the second question, this is something nobody was able to answer, do we really measure something valid with most of those telematic tariffs? So if we measure something not very fast acceleration, driving very few kilometers a year, driving only in areas which are not very densely driven through, driving only during the day, driving only in good weather, that should be a good risk, right? Is that a good risk? Is that a good risk? You want to be that dog? And old people drive a lot worse than young people. If you take it per 1,000 kilometers, 85-year-old, we had just a new study in, I think it was Netherlands or Belgium, that they cause about 28 times as many accidents, an 85-year-old, than a 35-year-old. And this is the question of what premiums you're really going to charge. And if they have a telematic and they measure it correctly, that's a question. But how do you differentiate between the old lady and the young guy you want to measure on the telematic? I'm not sure. Pressure on cost and efficiency. I don't think because of that we can make it more complex. So if we want to use more data, they have to flow into the process semi-automatic. We cannot afford to ask people a lot of questions and hammer it into a system to have a differentiated tariff. There is just not enough money left. And here there is a catch, cost ratio versus actual costs. If you look here at the cost ratio, Latvia is terrible, isn't it? 37% cost ratio. Are they crazy? US, 26. But if you take in absolute dollars, this is how much money is spent for one policy. So 19 euro in Latvia doesn't seem that inefficient, does it? That's all they have for admin, for brokerage, et cetera, on average left. And it's probably dropped in the meanwhile a bit. So here, the question is, can you really factor anything in for something like telematics or any other services? Or do you have to try to be as automatic as possible? And I think here it is also for the IT guys, try to be as automatic as possible, but still keep very individual. Try to, that no human being has to spend a lot of time on policies like that. Last but not least, the political and social acceptance of what we do in tariffication. We have to be honest, if we do something like telematics or other aspects, what we're doing is spreading the tariff. meaning we have an average loss cost which we need, which just comes from the market, and then good risk pays a lot less, bad risk pays a lot more. And there has to be somewhere a border. When we say we can be so good that everybody pays this individual premium, is that still a solidarity we want to have? There was just a German conference where a professor said, no, it's not about solidarity. I think it is about solidarity. And people have a gut bad feeling if things are too differentiated. And I like this guy, so we have here Mr. Rich Com and IOU Hitkerb. That's two guys, and we just put in some parameters. This is now actual parameters I used from a German insurer, and just added up what would be the risk premium, or let's say premium, those guys would have to pay, and this is the result. It's a little bit rounded, so it makes 100-fold. The average you can see in Germany is around 200. So you can see it can go down to 1/8 of this 200, or it can go to 20 times of the 200. If we spread it this much, is this still fair? If we take from an old lady, like I showed you, 85-year-old lady, 3,000 euro if she's still driving a lot, is that fair? In that, before I show it, because I want to show a question. In that, there was a very interesting study some weeks ago from the University of Applied Sciences in Cologne, together with Huck Coburg, the largest motor insurer in Germany. It's about the acceptance of accepting a factor as being fair or not fair in the population. So, gender. Would you think the population thinks that gender is a fair criteria for measuring? I mean, ladies save money, motor there. Who thinks it's fair? It's forbidden, but it could be still fair. Nobody thinks it's fair? Okay. Bonus malus? Engine size? Okay, I'll give you one question and then I'll show it, because I was very surprised. Type of vehicle, so if it's a Rolls Royce or bonus malus, which is more accepted? Absolutely. Absolutely. Bonus malus. This is, I only have this version, sorry. Bonus malus is accepted by 78% as fair. Gender, by the way, is 7%. But you can also see here, type of automobile is only 1/3. Over 65 is also only 1/3, seeing it as fair, and over half seeing it as unfair. What is interesting is that many aspects which are measured in telematics are seen as fair. So somebody who's driving too fast, too fast, speeding, how much he drives, horsepower of a car. So this is still considered above average for fair. I think we need to take that into account when we do things, which we tend to forget, because especially when you talk to actuaries, you know, that's all here, but we have to add this a little bit or this a little bit. I'm done. So that is the high-level view. It is a very challenging world out there, a very fast-changing world. And I am absolutely certain motor business for Central Eastern Europe will stay the most important area, both Casco and MTPL. And you will make your mark or you will lose your money in that business. You can be a niche player, yes, without MTPL or MOD, but the big volume of business will stay there. And the main point is you have to get more and more and more efficient going forward, because the frequency will drop significantly.